Hello everyone, I'm Annie and today is October 25th. Today, both the A-share and Hong Kong stock markets have delivered significant news, with both opening on a high note. Let's dissect how these two pieces of news may impact the market. But before we dive into these stories, let's briefly set the stage. Although the Hang Seng Index has had its ups and downs recently, the release of Huawei's M7 and the subsequent surge in orders for the flagship SUV M9 have grabbed the market's attention, boosting the EV sector and even triggering limit-up movements. Captain A. Vincent will conducting a seminar on investment development strategies for the automotive sector and related component stocks. We will share the reviews afterwards. Now let's start with the news regarding the reduction of the Hong Kong stock stamp duty. We'll follow that up by understanding the significance of the central government's insurance of 1 trillion yuan in national debt. First, as one of the international financial centers, the financial industry plays a crucial role in Hong Kong's economy, and the stock stamp duty is a significant source of the revenue for the government. In 2021, the stamp duty generated 53 billion Hong Kong dollars, accounting for 16% of the tax income and 8% of government total revenue. Therefore, reducing the stamp duty rate has a considerable impact on the stock market. However, when examining historical data, we find that Hong Kong has adjusted the stock trading stamp duty rate 4 times since 1998, with 3 decreases and 1 increase. In the short term, reducing the stock trading stamp duty can lower trading costs, send positive policy signals, and boost investor confidence, often resulting in a positive effect on the stock market. Conversely, increasing the stamp duty had the opposite effect. For example, when the stamp duty was unexpectedly increased in 2021, the Hang Seng Index fell nearly 3%, and there were a substantial net outflow of funds from the southbound capital. Therefore, the impact of stamp duty adjustments on the market's performance can be significant in the short term, but less decisive in the medium to long term. Currently, the Hang Seng Index price-to-earnings ratio is only 8 times, which is historically low and lower than the valuations in many other global stock markets. Furthermore, market sentiment is quite pessimistic. So please leave your comments if the reduction of stamp duty can boost your confidence to purchase stocks. So next, the significant contributor to today's market opening is the news of the central government issuing 1 trillion yuan in national debt. This move serves several purposes. First, it is a necessary step to support post-disaster recovery and improve disaster prevention and relief capabilities. China has experienced various natural disasters this year, necessitating significant resources for recovery. At the same time, the government aims to enhance its ability to handle extreme natural disasters. Centralizing the insurance of natural debt allows the government to provide these funds, particularly as local governments may have limited financial flexibility due to the existing debt burdens. Therefore, increasing natural debt insurance will direct all funds to the regions in need in the fourth quarter. Second, this move enables the government to front-load its fiscal efforts for the coming year. The decision to make such an adjustment in the fourth quarter indicates the government's commitment to ensuring economic growth in 2024. Lastly, this issuance represents a more optimistic fiscal policy approach for 2023. Increasing the deficit to over 3% of GDP in a non-pandemic year will have far-reaching implications. The experience of global economics after the pandemic demonstrates that moderate fiscal expansion can counterbalance risks from economic balance sheet contractions. With stable price levels in China and more favorable fiscal conditions compared to the overseas economies, this fiscal adjustment signals a positive direction in the medium term for economic growth expectations. I hope this overview helps you better understand the interpretation of these news stories. Stay tuned for more updates as I continue to share the latest news with you. Bye!